I've got a fantastic set of speakers, and instead of being at the back, come and join me up here. And just while they're joining us, for those who don't know me, my name is Richard Betts. As Roger said, I'm with the founding partner of Real Asset Media. And we do, I suppose, something like Iberian Property does for Iberia, but we do it for the whole of Europe. So we're picking up on global themes. We do around 60, 70 events a year. So we're actively tracking what's happening in the market, and I'll be happy to share any of those things as they come along within this. But yes, do take a seat, guys. I was intrigued by the fact that Mick Jagger is thinking about moving here, because I think that also Madonna was here, so that is also a potential golden marriage we could look to. I've done a quick introduction, but that seems unfair if we don't introduce. So let's start with you, Elizabeth, and then we'll run along the line. And it would be great, I think, for everybody here, because there is such a depth and difference in terms of experience on the market, to just briefly introduce yourself, but also what the strategy is. So Elizabeth, let's start with you.
Thank you. Well, I'm the founding partner of Explorer Investments. We are a private equity manager, and we run assets in industry services, but also in real estate, namely in hospitality. We actually fell into hospitality a little bit by accident, to be honest, about 13 years ago, and we took over some assets that were held by various banks that were having financial difficulties, and we took them over. To be very, very honest, we had no experience in hospitality, so we've learned a lot in the last 13 years, and I'm the rookie on this panel. But since then, we have become the fourth largest manager of hotels by number of hotels, not beds. And I think we have done a significant repositioning of the sector in Portugal, and will continue to do so.
Great, thank you. Jose.
I'm from Pestana Hotel Group, which is the largest operator in Portugal. We own and operate about 110 hotels in 16 countries, with a big team of 5,000 members of our staff. We had a tremendously intensive decade of growth until the COVID. And after the COVID, we came out even stronger, and we are now running at an EBITDA of approximately 250 million. So we have the appetite and the capacity to move now to a next stage. So our investment strategy has mainly two priorities, which are the main cities in Europe. We are already present in many countries in Europe, and of course in the US, where we already have 4 hotels. In Portugal, we have a few new projects, but a lot of branded residence projects.
Okay, good. So we can pick that up a little bit as well. And John, over to you.
Daniel.
Daniel, sorry, Daniel.
I can beat John. It's fine. Daniel von Barnevin. I head up development for Accor for branded residential globally, and look after operations also across EMEA. In terms of Accor, we're the second largest operator and licensor of branded residences globally, number 1 outside of the Americas. We have 180 operating and pipeline branded residential projects, around 6,000 operating hotels, and Portugal is a country which we have a huge amount of interest in. It's a market that we're extremely positive in, obviously on the hotel side, but also on the residential side, and one that I'm personally passionate about, having throughout my career spent a lot of time advising on many of the projects that Paula was showing earlier in the graphs.
Great, thank you. John.
So I'm John Calveo, I co-head Arrow. Arrow is a large investor across Europe. We manage 120 billion of assets in 8 geographies. One of the largest investors here in Portugal in the real estate space, hospitality included. We have over 3,000 people in Portugal. We've been vertically integrating ourselves over the last couple of years. We do a lot of different things. We've been investing in Portugal for 17 years. I've been here for 15 of them. I'm sure there'll be a lot more questions in the future, but pleasure to be here again.
Great. Javier.
Hello, I'm Javier Aruz. I'm one of Azora partners. In Azora, we invest in, we're a private equity firm, very similar to Explorer and to Arrow, much smaller. And we invest across real assets, traditional real estate, and also hospitality is one of our core strategies. We have been investing in hospitality for the last 15 years or so. And we are an active player across the leisure space, and we have a very strong position in the Portuguese market, which for us is one of our top priorities.
Okay, great. I'm actually going to stand up because I can't see you good people over there. And if you've got a question, I would like to know when you've got one. We're going to try and make this interactive. So if you've got questions, I'll ask for those in about 15 minutes. And so if you've got questions, if you've got thoughts, please contribute them. Let me know, stand up, whatever is necessary to get my attention. And I'll make sure we also pick those up with the panel. Elizabeth, maybe just starting with you, but interested to get everybody's views on this. Just in terms of the couple of presentations we had there, how do you see that? Does that also chime with some of the things that you're seeing in the market, how you're seeing the market moving forward? Let's start with you, Elizabeth, but I'd be keen to get everybody's view on this.
Mm-hmm. I think there was a lot of things that certainly resonate with us and very, very interesting. I think Portugal's clearly on the map. I think the macroeconomic, good performance has attracted more interest into this little country that had done rather badly and was a pig for a long time and is now beginning to fall out and no longer be a pig. But I think the macroeconomic side was very important. Secondly, I think so that's brought investment. Clearly, I think has been an effort on the part of some of the governments to increase that, although there have been interesting measures that, like non-domicile, which have been much criticised, but I think have done a lot of good for the country, and golden visa. Both of these initiatives really have given the country, Portugal, which is a small country, a huge influence on the world arena, and I don't think we're quite aware of that. And that has rippled off into property and tourism. So I think that has certainly been the case. I think there's still a lot of work to be done on repositioning and quality. Portugal's hospitality sector was very much linked to cheap and cheerful Algarve offer, and I think there's been quite a lot of work, ourselves included, in, as I say, repositioning and making it more of a luxury destination, which I think the country certainly needs. And there has to be better services, better offer, and obviously hospitality is becoming more experience-based. It's a country that is interesting enough to provide a lot of these experiences, but I think we still have some work to go in this field.
Okay, good. Jose, I'd be interested also in your kind of take on that, but maybe as well pick up, you mentioned their expansion and that you were looking to grow. Do you see that more in terms of international expansion, in terms of growth, or do you see that coming from here with existing projects that you've got here or lifestyle resorts here? What's the plan?
I think it's both, but I think in Portugal it's time to consolidate. I think, generally speaking, about the sector, it's time to reach a higher level of ambition. Of course, there must be this investment in luxury projects, but this is not the market. This is not the only market there is, and I'm sure Portugal has been very successful, and regions like Madeira and the Algarve, who are now mature regions, they did not explore that segment a lot, but they did just a little bit. So I think Lisbon, I always say that Lisbon and Porto were playing in what we call the Terceira Divisão for many years. Now they're only up to the leadership of the Segunda Divisão, so we need to bring Lisbon and Porto up to the Champions League. We are not there yet, for sure. We are well behind the top European capitals. So I think there is room for growth, but for more selective growth. And of course, I think there is an elephant in the room, which is called over-tourism. I think we'll get to that later, but that's impossible not to discuss over-tourism.
Yeah, it was interesting to see the over-tourism element in terms of the research as well. You mentioned there the Champions League, and I was interested to see that we did some coverage of Dubai launching Chelsea-branded residences, for example. And so you can begin to see how branded residences are really moving away from just hotel brands, but also to other lifestyle brands. And it might be interesting, Daniel, just to pick up from from your view, is how you see the different parts of that, the different sectors of that, where the attractions are, how you see that growing, the financing, those elements of it.
Sure. So I think on the residential space, when we talk about branded residences, there's always a lot of confusion. Sometimes people confuse a serviced residence, which is a hotel extended stay product, with a branded residence, which is a real estate product where the title deed is actually sold. And then you get into understanding, all the plethora of brands out there, like Chelsea, etc. So you have non-hospitality branded residences, which make up for around 20-25% of all the branded residential product in the world, and the remainder are hospitality branded. Now, in order to differentiate, I would echo the words of some of the developers that we work with who do both hospitality and non-hospitality. They have differentiated by basically saying there's one thing which is a branded residence, and that is one that is branded by, operated by, and maintained to the standards of a hospitality brand. The other is a labeled residence. Now, that's not to be derogatory towards non-hospitality brands, but because there is a lot of demand out there, clearly these non-hospitality brands succeed. But if you look at sort of what is driving purchaser demand, when you look on the branded residential segment, it is the appeal for a sense of community lifestyle, the hassle-free, turnkey, trust in an operator where they understand those brand standards, they understand the design, the amenities, the service which will be delivered to them in a sense where it is like living in your own hotel suite. It is your property. It is managed and maintained to those standards. Everything is centered around trying to make your life as a residence owner as hassle-free as possible, both on the property and across the network of the hotel operator. And that spans both from luxury, where it all started, all the way down through premium and into mid-scale. So that growth continues to be exponential. The most significant growth in the recent years has also been in the standalone branded residential sector, which currently, for those operators of us who've been in the business for around 25 years, represents roughly about 30% of our signings.
Okay, interesting. John, it'd be interesting to get your take on that, because these sectors, I think, are fascinating in terms of how, and you've been in the industry for a long time in terms of particularly this market, but also markets across Europe. So it'd be interesting to get your perspective, I think, both on the branded residence side, but also how you see Portugal, particularly in the context of the opportunities here and the other areas that you're active in.
I agree with what everyone's already said so far. I think we're a small country and we need better product and better services, and I think that's something that we're definitely focused on in the hospitality world. But across branded residences, we have a few projects ongoing right now in the branded space. One in Rueda, we have some happening in Algarve as well. It's something that we believe in, obviously. I think those branded residences come with services, so they're both side by side, and I think it speaks to where the demand is coming from. As you see, more Americans are coming, and that's certainly their desire is to have service departments and things that when they get here, things are ready to go. I think when you talk about opportunity, because we do work across the spectrum, it's not just hospitality. We obviously own quite a few resorts in areas around Portugal, Vila Moura and Palmares, Rueda, Troia, and others. They're really, in some cases, they're urban cities that we're developing. I mean, look at Vila Moura, we own golf courses and equestrian centers and residential that we're building and hotels, etc. There's really a need for everything, and even looking at possible expansion of schools and things of other natures, you're really building a city, and that is something that we've taken on because what we're moving into this country at times is not just people who are coming here to visit, it's people who are coming here to live. And what we're seeing in Algarve in some areas is that it's younger families that are coming here to live. And so you need the whole ecosystem. We brought a hospital into Vila Moura, which didn't exist. We want to bring one into Troia, which doesn't exist. And for them to be viable areas of actual 12 months a year living experiences, you have to have the whole ecosystem. So we're investing in the entire ecosystem in these areas to attract a wider range of people and buyers. think the other thing I would just add is that we also invest in things that are not, again, hospitality. I mean, we invest in affordable housing. We also invest in, building things that are leisure items. That's super important. The amenity sets is super important. So we're investing in that as well. And so it's again, for us and the way we invest, I don't typically invest in a single hotel in the city center. That's not been our style. Our style is to really, invest in destinations and then uplift them and make them destinations for a wide range of buyers, visitors, etc.
And is that where you see kind of the building of longer term value, would you say, in terms of the investment value?
There's pockets of that, and that's, again, where we focused as Arrow in particular. We have a lot to deploy every year. I mean, we're deploying more than $2 billion across these geographies on a yearly basis. And so, for us to do a random hotel, that's not really something that makes sense at this level. At our level, it's really the destination is important. You'll hear later that we started a sales and marketing group called From, and their challenge is not to sell 10 homes or 100 homes. They're selling 1,000, 2,000, 5,000 properties in the next years, and not just selling properties, but selling destinations and lifestyle. And that's something that we're selling.
Okay, good. You mentioned there a bit about the amount of capital that was coming in. And it'd be interesting, Javier, just to pick that up with you, because Azora's obviously been active in the Portuguese market, but a great deal of experience generally in the Spanish market as well. How do you see that in terms of institutional capital coming into the market? Are there challenges here? Are they seeing the opportunity? What's your sense given that experience?
I think I will not agree with Jose here, because I think that Portugal is playing the Champions League in terms of investment attractiveness. And today, I think it's perceived as one of the top markets across Europe. There's not an additional risk premium to invest in Portugal versus some of the other European countries. So there, I think, it's really playing at the highest level across the different markets. Volumes depend on supply, but not in terms of appetite. I think today, and Arrow is a good example, but there are other very big players which are present in the market, and there are many of them which want to be present in the market. And they are really actively trying to identify those opportunities. I think that's based because, and we saw the previous discussion on geopoliticals, and I think that's because Portugal has done things well, and it's our perception, and we invest across all Europe. It is probably one of the most investor-friendly markets. I think it has done things in a proper manner. It's a country where you find stability in terms of labor regulation, stability in terms of tax regulation. Of course, there's always some changes, but it's not huge volatility, which gives a lot of comfort. It's a country that it's safe. It's not only safe because there's less, not physical risk, but also it's safe from the point of view of investment. There are some markets where we go and after due diligence, you are still not sure if the title is there or is not there. You don't face that type of issues when you come to invest in Portugal. It has a very solid, industry providers in terms of lawyers, in terms of accountants, in terms of advisors. So overall, that makes it a very attractive. It makes it a very attractive country to be invested in. It also has space to improve. There are areas which I think are not specific of Portugal, but they are especially acute in Portugal. For example, licensing, it takes a lot of time, especially in big cities. So that's frustrating when, for an investor, time is of the essence, not just the amount of capital, but it's at what speed you can deploy that capital. And probably one thing that is more specific of Portugal, I think it's a more expensive country in relative terms in terms of construction works. If we look at the similar level of RevPAR, it's more expensive to convert Portugal than other destinations. And that, if we just make it specific for Lisbon, it's a very clear example. It's a very expensive city to transform. And I think, I don't know if there are construction companies here, but I will encourage them to increase the number of competitors in the market. So overall, I think it's a very well positioned. this industry we're investing in across Europe, across the Mediterranean countries and Portugal, I think we are in a very good industry. It has a very strong tailwinds. So regardless of some minor cycle moves, I think for the long run, we're probably in one of the most, let's say, solid fundamentals industry. And I think that Portugal is going to enjoy, a very prime positioning.
Okay, good. I wanted to pick up just a little more quick fire in terms of your views, because I think there's some interesting points that were in the presentation. You mentioned it actually, Jose, as well, which was, how do we balance returns? How do we balance development against the issues which were too much tourism, mass tourism, over-tourism? How do we see that? So it'd be interesting to get different perspectives on that. Jose, you mentioned it first, so it'd be interesting to get your view.
Sure. I think that in some regions, like probably Madeira and the Algarve, that's evident. You have to plan if you really want to reposition or to continue the work of repositioning the Algarve and Madeira, which has been done for the last years successfully. The RevPARs have been growing, and the quality, general quality of the destination has been growing. If you want to do that, it's impossible not to look at some kind of more aggressive planning in terms of new developments. I think you really need to look at that, and over-tourism becomes a question more and more. I think that the impact on the communities is something that has to be taken care of. We are not favorable for extra taxes and everything, but the touristic tax has to be used in clear projects that benefit the communities. That's something that has not been done yet, I think, on a larger scale. In Lisbon and Porto, I would dare to say that we should, in the long run, maybe in the next 5 to 10 years, look at cities like Barcelona or Amsterdam, not to mention Venice, of course, in which clear measures have been taken about new projects to be developed. So I think that's the discussion that needs to be launched, and I think it will benefit the country after all.
Okay, good. Any other views on that one?
I would just echo what John said earlier when you were talking about putting the infrastructure in terms of hospitals. It goes beyond that in terms of school. The whole socio-economic fabric that is needed for people to sort of look at potential relocation as a primary home, all of that helps prevent an area from becoming overdeveloped purely as a touristic area. And then, of course, you get into the regulation side. Like Barcelona has put in measures to mitigate Airbnb, short-term rentals, tighter regulation. Those aspects are very important. It's what the tighter regulation, Dubai did a complete about turn after the crash from 2008. Dubai has tightened hugely in terms of escrow laws, regulation. For example, in Dubai, if you don't pay your service charge within 3 months, lawyers get involved. Within 6 months, the government will step in, repossess your property, sell it at auction. So within somewhere like that, that gives a lot of confidence for investors moving into properties. It gives operators a lot of confidence as well.
Okay, interesting. I think you wanted to pick that up, Javier, as well. Oh, John, yeah.
I have a quick comment just on over-tourism. Coming from the U.S., which is obviously at a much bigger dimension and size, and Zé has a hotel in Orlando, and 50 million people visit Orlando every year, and I don't think they would complain about over-tourism in Orlando because they live off of tourism. So when Portugal needs, the economy is based on tourism now to a great extent. It needs tourism. Now, it'll never be over-touristic in my lifestyle because our infrastructure is nowhere needed or is nowhere near at the level to be over-touristic. The airport is completely full, so it's not like you can bring many more flights. Algarve Airport is also full. You can't bring that many more people into the country until you fix the actual infrastructure of what brings people to these countries to visit them, etc. So I think we're worried about the wrong problem when we talk about over-tourism because there's just not even enough ways to get into this country to create over-tourism. Okay?
And I can confirm that the immigration queue today was very, very long.
That's an example, right?
Yeah.
I mean, if your first experience is 2 hours on a queue, that might be the last time you come to visit, right? So We need to fix the infrastructure, and then we'll worry about over-tourism.
Yep.
My point in terms of over-tourism, first, we're all tourists. So a tourist is not a different species. Okay, so it's very easy to criticize. I don't want tourists when we travel. Okay, and then secondly, in terms of travel, it has grown, I think, over the last 15 years, around 5%, 4.7, 4.8 compounded. The hotel supply has grown in the Mediterranean below 1%. So the issue is not that there are too many hotels, and that's causing the over-tourism. And I think the fact is that the alternative lodging is the one that's putting really pressure on the local communities. And there I'm not against Airbnb, because I think Airbnb has satisfied a demand that didn't exist before, but that has to be regulated. I don't know, I should know because we did the number, but I don't have it top of my head. In the case of Madrid, only 9% of the listing in Airbnb are licensed. That means that 91% of that supply, it is unlicensed. Okay? So I think there is where you have, and you really face the issue of over-tourism. And I think you cannot, I mean, it's 20% of Portuguese GDP, it's 12% of Spanish GDP, 10% of European GDP. You cannot really put this industry at risk. I mean, it just goes against all sense. We were saying before that Spain and Portugal have outperformed, or Portugal and Spain had outperformed the rest of Europe. It has been mostly on the back of a very strong performance on the tourism industry.
Elizabeth, you wanted to be...
Important points have been touched on. The airport, I mean, as a British passport holder, it's an absolute nightmare, and it really will put a dent in new tourists coming in. And I think it's a very easy problem to fix. And one thing is slots and infrastructure, which there's been great debate, but the other is also, you know, passport control, for goodness sake. So that one's fairly straightforward and should be fixed ASAP, because this country definitely lives off tourism. But I think it's a fairly distant problem still. I think there are a lot of regions that are very unexplored and interesting in Portugal. We've seen some of them recently. You know, the Douro is up and coming. We have a gentleman here who floats lots of boats up and down the Douro very successfully, and encouraged lots of hotels to open. But I think there are other regions, you know, the Alentejo and other regions in the centre, so there's a lot of room for tourist destinations to develop in this country, and I think there should be a concerted policy to do exactly that.
Okay, good. I'm going to come for questions in a second, so if you've got them and can hold on to them for a couple of minutes, please do, but I am going to come to you. Let's pick up a little bit on opportunities, and I'm going to start with you first, Elizabeth. Just in terms of, you know, from a private equity perspective, you know, where do you think the best risk-adjusted returns are at the moment or in the future? You can take a judge on that. Is it in traditional hotels? Is it in accommodation? Is it in sort of complementary sectors? Where do you see that?
We see it in hotels because of these three issues. The tourism numbers continue to grow. We feel there's a lot of repositioning to be done, i.e. improvements in quality. And I have also mentioned luxury. We do own the Six Senses in Porto, in the Douro Valley, which probably put the Douro Valley on the map, to be very honest, as a destination. And I think, you know, that came from a bankrupt property. So I think there's a lot of repositioning that can be done. We like and enjoy getting our hands dirty, doing the CapEx, which we found we do with remarkably quick paybacks, and it's highly profitable. There's also another, so elevate and then be able to increase ADR, RevPAR, for us has been very, very successful. The other thing I think is important for a player like ourselves, I mean, we're probably the smallest, no, we're not probably, we're definitely the smallest on this panel, and modestly so. We like, you know, we're very happy to pick up little bits and create a bigger bite size, i.e. we've done it with Octant Hotels, a series of boutique hotels that is something that I think should grow, and then eventually sell it to one of you very rich guys over here who you know, want to invest hundreds instead of modest 10s, 20s and 30s. Yeah.
Good. Anyone else on the opportunities side, whether that's, I mean, I was interested...
I hope you're all buyers, of course, any more.
About the, you know, whether that's about the types of leisure, hotels, or whether or not it's actually about the location, because interested to see you there mentioning other areas that are not over-touristed at the moment. So any takes on that in terms of opportunities?
Sure. I mean, we're obviously investing into other asset classes that I think are very underrepresented in Portugal. Obviously, student housing is one of them, and senior living is another one that we've been looking at. Again, affordable housing is another one that we've started to expand on. So there are sectors that we're definitely looking into where there's a lot to do here in Portugal. And so our focus, because I guess we do have quite a bit to deploy every year, our sector has to kind of go wide because, again, Portugal isn't very deep, right? It's small in its nature. So we end up doing quite a bit of things across a wide spectrum of investments, and certainly in the real estate space, it includes what you've all seen already in the market with us. We will do hotels, we will do leisure, we will do student housing, we will do senior living and affordable housing, and if it makes sense, we'll do it.
Good. Does anyone have any questions? There's now 10 minutes left. I've been shortened. I'm going to start scanning over there, so you've got more time over there, but by the time I get to the other end, if there isn't one, I'm going to move straight on. So I'm just going to have a quick look and discuss that while I'm doing it. Any questions? No. Great. Okay, good. Let's pick up on one thing which I would like to know, which is because a number of you have been invested over a period of time here, would you invest with the same enthusiasm now as you did when you first started? Would you still be an investor now? If you were coming to the market new?
Sure. We are investing in Portugal in both hotels and branded residence, but at this time I think that the pricing has become more challenging. I think one has to be a bit more cautious about the cost of entry. I think the new players are somehow paying an overprice that we as established operators don't feel we should pay, but we are not selling any of our assets. We are keeping all of them and still investing in some new projects.
Okay.
Steady doesn't sell it.
You've tried buying them. Good. Look, what I'm going to do is a quick WooCap question that I was going to do at the end, but I'm going to do it now if we're ready to do a WooClap question, are we? Let me know. It will appear here if we are, and if not. But the key part to that is, in terms of hotels, would you buy, hold, or sell? So that's what you need to think about, and it should be appearing any second now, I would imagine. Buy, hold, or sell. You're not allowed to vote yet here on the panel. I'm going to see whether or not you agree or disagree with the audience. So let's see, buy, okay, all right, there's only one, admittedly. 2, 100%. Or it's looking quite like buy, okay, all right, good. Okay. There's not a lot of selling going on, John, is there? Yeah, nobody's selling here at the moment. Yeah, so there's the QR code. So if you haven't got that, do hold on to that. Now, it looks as though we're not going to be in selling mode. So I'll get the whole lot in a minute, but let's start with you guys. So, okay, all right. So it's hold, and now that that's come out, it's encouraged more people to buy, by the looks of it. So let's start with you, Javier. So do you think that the audience is right? Do you agree with them? Will you be holding, buying, or selling?
I mean, if you have the luxury of holding, then you can hold. If you need to, I mean, we are buyers in the market, so we're actively looking at opportunities. But it's true because of the nature of our vehicles, we also need to divest. So at some point in time, we'll need to exit our position in the market. And going to your question before, we wish we had started in 2014, 2013. Would be very, very, we came in probably 4 or 5 years late to the market, but we remain extremely committed to the Portuguese market. For us, it's easier to invest in consolidated destination than it is to try to find a new, nice spot. But we think it's going to overperform Portugal versus some of the other European markets.
Okay, great. So overperformance from Portugal.
Yes.
Great. Where should we go now? John?
It's like hobby. I mean, we're all three, so it depends. But we do sell some stuff, we buy stuff, and obviously we're holding on to stuff. I think what I would say is, having been through most of the cycles here in Portugal since 2008, I would say the version of where you think you can buy something and not do anything with it and sell it at a profit, those days are long gone. And it's all about hard work. And so if you have the guts to go do and spend the hours, the time, and the brain to actually do something with the properties, strategy-wise, build them out, put in the capex, take the risk, etc., then there's always opportunities. But there's no easy buy anymore or any easy sell. This is a very well market that is well known these days. It's not like 2010 to 16, that's for sure.
Okay, interesting. And that's the same as well across a lot of the sectors that we're covering. This is certainly not unique to hospitality and leisure. Daniel, over to you.
I'll answer it both from the perspective of the institutional investor, but also the individual purchaser when it comes to a branded residential component. And I'm intentionally looking at it from hotels and residential combined. So as an institutional investor, it would 100% be buy. I echo exactly what you said, John. If you're looking at developing hotels co-located with residences, or you look at acquiring some big box hotels, you're able to convert a number of floors, or you buy an asset, you add some floors, those are sold as branded residences. You're able to have a lot of synergies between the hotel and the residences in terms of cross-charging on the cost side. On the revenue side, these are additional sources of revenue, and we're talking about hundreds of thousands of euros worth, both in terms of the additional revenue and the shared costs. So that's a very significant component. And the ability to sell the residential whilst you're doing the project has a massive impact on the IRR. So it very much sort of those are the kind of things that would take you from a value add to an opportunistic level of IRR. From the purchaser's perspective, 100% hold as well buy for Portugal. And from a residential, branded residential, buy to hold. So when you look at what the evidence shows, branded residences hold their value above non-branded residences. So everybody knows branded residences sell globally at a 30% price premium. They sell faster as well for the developers. So that's wonderful. That's why if you're a developer, that's why Arrow and Pastana and others want to develop residences. But as a buyer, why are you buying it? You're buying it because these assets are looked after and managed for you by operators who've got experience in managing assets worth hundreds of millions for owners. And when you look at the data, 10 years, 20 years later, these properties are still maintained to those same stringent brand standards and operating standards. And that translates into significant premiums as a resale. So as an investment perspective, it's why we're seeing so much demand into the branded residential sector. Great. And Portugal has all of the requirements in terms of the blend between the domestic wealth and the international buyer appeal.
Great. Jose, over to you.
Well,
buy, hold, or sell?
Well, definitely hold and buy selectively. We think there are opportunities in some repositioning of assets. There might be some opportunities in terms of consolidation. Some larger acquisitions could be interesting, but definitely at this stage, we feel that the prices have reached a point, the price per room. So when we compare, that's why I was talking about the Champions League, when we compare the value per room of Lisbon and the RevPAR in Lisbon or Porto, and then we have the capacity to compare that with the other major European capitals, you have to come with some kind of conclusion. So you have to be realistic and cold about it, and that's why we are a bit more cautious now.
Okay, great. Elizabeth. Buy, hold, and then sell to everybody else by the sounds of it.
Absolutely. But I totally agree with John. I think, that's the way we see life. You have to work hard, you have to turn the assets around, be prepared to buy smaller things where price per room is still remarkably low. And we look for under-managed and under-invested assets, invest, put capex in, run them properly, and we've seen a lot of value there. So, as I think it's well known, we are buyers.
Great, very good. Super, thanks very much for sharing your insights here today. I think the branded residence side is very interesting going forward. It's an area that we're tracking both here but also across Europe. So thank you to my panel, and I would like to welcome back Roger. Roger, come on back. And you've got good news for everybody, I believe.
Not just yet.
Oh, not just
the
yet.
bad news is I've got to use this mic because your team has stolen my headset. Thank you very much, panel. I think it's absolutely fascinating. I was intrigued by the number of, on Paolo's map, how many of the branded residences were being built in the sea. So I hope the environmentalists are under control. And Elizabeth, I've spent a week traveling around Portugal, absolutely wonderful, enjoyed it, fantastic road network, 3 days in the Douro. And on Wednesday, I spent nearly half an hour watching a Spanish and a Portuguese coach driver argue who was going to back up to get over the bridge of the Douro. And in the meantime, 6 more coaches had joined the queue. I think over-tourism may not yet be touching Portugal in a serious way, but I think certain areas, I mean, we've seen Mallorca, we've seen Barcelona. When it comes, it can come very quickly and it can hit hard. And I was in my car. and I think it's very important that you anticipate what might come, look at some of the challenges, look at some of the social issues that residents are finding very easy to shout about and demonstrate about, at least in certain countries, just so that it does not hit as it has in other areas. So thank you very much. Now we move on to the next. John, I'm going to ask you just to stay on up there a minute.
Super, thank you.